Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit homegain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to homegain.com. Welcome back, Washington, D.C. Metro, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, if you ever have any questions, real estate-related, finance-related, credit-related, short sale versus foreclosure, whether it, whatever it may be, I'd be glad to help you out. If I can't personally help you, I'll point you in the right direction to the person that can. The number is 877-245-2030. That's 877-245-2030, or via the web at realestate360live.com. That's realestate360live.com. Before we went to break, we were discussing short sales. And one of the things that I wanted to do, I do have a book on my website. It's realestate360live.com. And it's the Homeowner's Guide to Real Estate Short Sales. For those of you who are just looking for some general information right now, you don't want to have to talk to anybody, I put together a book that's going to give you step-by instructions of guide of how banks operate in the negotiation process. And it also includes some little nifty tools and forms required to short sell your home or investment property. But it's a good place to get started. So you can check that out on the website at realestate360live.com. Louis, I get bombarded with these questions about short sales lately, and it's just because I think that everybody's trying to figure out, well, what can they do to try to position themselves to, get out of the bad investment that they have right now at the time and be able to move on with their life. And, I wanted to give, let people know that, just because you're upside down, ultimately, if you plan on staying in your home for 30 plus years and ultimately pay it off at some point, it doesn't necessarily make it, a bad investment. Obviously if your interest rate is 6 or 7%, then you're probably in trouble. But not everybody is in dire straits, because in certain instances where you were discussing mortgage rates adjustments, Louis, there's some situations where people's rate has actually gone down now, where they were at 4% and now they're at 3%. So not every situation is bad.
Well, there's some situations where the people need to move to get another job, and they really need to do the short sale.
And that makes complete sense. And you know what? The bank, more times than not, on those relocations, especially for jobs, those are the ones that fly right through, because it's not, it's more strategic.
Well, what about, as you mentioned earlier, where it's prospective? You say to yourself, I have to leave this area to go get a job. Now, you don't have a job.
Right.
You want to leave, and I think you're more in a bind there than you would be if you had a job.
Yeah, and they're going to want to see most of the time, like some sort of proof. If you're, so what I would tend to tell people is they would probably have to find a job in another area already.
Right.
You know what I mean? And then if they could provide the offer letter coming, that's what I typically tell people in those instances, because the more proof that you can provide to the bank, the better, because everything's got to go into a file, right?
But it's kind of a catch-22 for the person, because they're not really willing to look for a job unless they know they can get out of a mortgage.
Yep.
And then they're kind of stuck, because now they have to stay in the house, and they're not going to look, because their concern is maybe they get a job offer and then the bank doesn't let them out. Then what are they going to do?
Right. Yeah. And the best advice that I can give in that particular situation, Louis, is to just go ahead and there's nothing wrong with submitting your short sale application to the bank up front. See if they're willing to negotiate with you trying to do that. The more open and honest that you actually are, the better chance you have. It's the people that are trying to hide stuff are the ones that their short sales don't go through. If you have another asset account or another property that you're trying to hide, they're going to find out. And if they find out later, that's just all the more reason for them just to nix the deal. So the more open and transparent that you make yourself in the beginning, the better off, your chances of having a successful short sale. I think that this is becoming more of an industry norm. Short sale is just the industry jargon, but I really think that this is what banks have kind of finally come to realize, that it's probably the smartest thing that they can do, is allowing these short sales. The only thing they're trying to really prevent is the people that just want to strategically default. There are a lot of those people, believe it or not. For those of you out there that are just looking to just get out of the property, I would tell you, I would go ahead and just say, don't waste your time. Don't waste your time trying to do that. Because I've had a few, and I won't take those cases on just because I've seen that very, very, very few, unless there's like extenuating circumstances, will they ever go through. I want to move on to the next topic, which is, are you ready for the upcoming FHA refi boom? This actually is another. It's not necessarily another government program, but what it is FHA has changed their guidelines, and starting June 11th of 2012, HUD is lowering its upfront mortgage insurance premium and monthly mortgage insurance premium for all FHA loans that were endorsed, not closed, but endorsed on or before May 31st of 2009. Now, currently, past FHA loans have not been able to meet the FHA net tangible benefit required by HUD due to the increase in the mortgage insurance premium from 2009 to today. So the net tangible benefit basically says that, the payment that you're making now, it has to be decreased by 4 to 5%, or else you can't do that refinance. With the new reduction in the upfront mortgage insurance premium and mortgage in the monthly MIP, these loans should easily meet FHA's net tangible benefit requirement. So the highlights of this program are for all single-family forward streamlined refinance transactions that are refinancing existing FHA loans endorsed on or before May 31st, 2009. The upfront mortgage insurance premium will decrease from 1% to 0.01% of the base loan amount. This endorsement date can be found on FHA Connection site. What I would recommend for people, if you currently have an FHA loan and you want to find out when your loan was endorsed to make sure it was endorsed before May 31st, 2009, it's just call me. I'll do the legwork and make sure that, we can find that out for you by the end of the day. The number is 877-245-2030. That's 877-245-2030. And the second highlight for this program is that the annual mortgage insurance premium, which as of right now is 1.15% for all loans endorsed before May 31st, 2009, when they refinance, it will be only 55, so 0.55. So this could be the difference in saving, right now, if you try to do a refinance, save $200, you might save $350. So it's a big deal. Now, a lot of you guys are saying, well, does this apply for me? Well, the first thing, you have to have an FHA loan. Now, there's a lot of people, especially in the DC metro area, that do have FHA refi or loans currently, because those were the loans with the lowest down payment of 3.5%. So many people do have these loans. Now, I know I'm going to get flooded with calls after the show's over asking me, okay, well, when can we do this? And you can't physically close until after June 11th, okay? Because that's when all the things are going to be implemented in through FHA's website. So the best thing to do now is to just kind of go ahead and call me. I'll get your name in the system so that as soon as that things go live, we'll be able to process your refinance. Now, in a lot of people's cases, people that are sitting at 5.5 to 5%, now all of a sudden with that lowering of that mortgage insurance premium, it's going to save people substantial amounts of money. I'll refer you guys over to a loan officer that I work directly with. His name is Brian Eller, Gold Star Financial, and he'd be gladly take care of you and your refinance needs. Like, again, the number is 877-245-2030. That's 877-245-2030. Lewis, this is going to be, this is one of those, it's not like a government program like I was talking about. It's just an existing loan. They just kind of changed what the mortgage insurance premiums are. So it's great for people that are just out there right now just looking for any sort of break to be able to get their monthly payments down. I think this could actually help a substantial amount of people, as opposed to HARP and HAMP and all the other ones that they have out there.
And what impact does, where people have the ability to refinance, have on the overall real estate market, right?
Realistically, I think that people being able to refinance to the current market rates is a tremendous thing for the overall housing market, because what I think it does is it keeps people that may have been thinking about short selling their home or just letting it get foreclosed on, if now knowing that they can refinance their property down to rates 4% or below that,
right,
it gives them more of an opportunity to want to stay in that home because they're fixing in lower home ownership costs, right? So to me, it's great, because the more people that are able to refinance down to these low rates, I think it's better for all the communities because you're going to see less short sales and less foreclosures.
Right, you're taking some of the inventory off the market.
Yeah, and that's kind of like my overall thoughts on the market is that, the banks kind of shoot themselves in the foot, because if you actually go back and you work with the homeowners who are paying their mortgage on time, and you give them the current market rates, whether they're upside down or not, it's helping everybody. It's stabilizing prices. And, really, I don't think, the banks are really kind of greedy anyway. They really feel like, especially in the DC metro area, now everything's getting bid back up. So they don't really care if they take properties back, because the market's been going up and now they can foreclose. And still, a lot of the banks are going in and fixing up the properties and selling them more at a retail value. DC metro area foreclosures are not going for 30% less than the going market rate. It's like probably, maybe a 5% discount. Sometimes 10%.
Which banks are going in and taking over the homes and fixing them up again? Does Bank of America have that kind of program? Or is it more the regional banks?
Bank of America, not as much. I've seen Wells Fargo. I've seen Fannie Mae and Freddie Mac do it. A lot of the regional banks will do that as well. But a lot of the time it is your smaller ones, and it's Fannie and Freddie.
And do they use contractors to do that? They don't have a wing of an internal department that does the fixing up of the home.
Yeah, well, typically what they do is a lot of the times, like once they designate who they want the real estate agent to handle their foreclosure sales, they put it kind of in the hands of the real estate agent to go out and get the contracting bids and let them handle it. And then they'll refund the realtor for paying for this stuff up front. It depends on the bank. It's done different ways, but a lot of the time I think they put a lot of the burden on the real estate agent to take care of it on a local level.
And the real estate agent's incentive is not to get the fee to fix the house up, but to get the commission for selling the home.
Correct. Yep. And
and extra work for them.
Right, and their hope is to just be flooded with volume. But at this point, like I said, especially in our local market, we're not seeing as many foreclosures, more short sales. So in other areas of the country, that's completely opposite. It's the majority foreclosures. We're coming up on a break. When we come back, we're going to jump into the credit fix segment, and we'll let you know or dispel one of the biggest myths with credit is do the creditors automatically and accurately update my credit report? We'll let you know when we come back. Stay right there.